I'm a full-time funded forex trader. I'm 22 years old and I've been trading for 4 years now. In this video, I'm going to give you guys a full strategy breakdown, go over the basics needed to learn my strategy in full. And then after this video, I'm going to release a weekly in-depth breakdown of all the different aspects to do with my trading until we get to the point where we have a full playlist. So the main topics we're going to cover in this video is my strategy, what it is, some examples of some trades, and then how to identify levels, fib, and ATR. So let's get straight into it. I'm going to show you guys a trade that I took last week, and then I'm going to go over the different confluences, why I chose those confluences, and how to identify those confluences for yourself. So this is Aussie dollar, New Zealand dollar on the daily time frame. I only trade a daily time frame, and I trade almost every single major forex pair. I started off by identifying all the major daily levels. So we had this one, we had this one, we had this one, and we had this one, and one more, this one down here. So I've replayed it a few days back so I can actually show you the level that we took. So here's the levels we had. I then drew the fib from the high to the low down here, as you can see. And the setup I was looking at was the 61 fib with the daily level. So this was my point of interest right here. For entries, I moved down to the 4 hour and then also the 1 hour and identified where the actual level was itself. So I marked out this level and then I hopped to the 1 hour just to make sure our level was within the zone, because sometimes the wicks can be pretty big on the 1 hour compared to the 4 hour and vice versa. As you can see, I marked this as the entire level, or you could change it for that. And then what I'll do is I'll base the entry around those different zones. So I'll look at the daily zone, I'll look at the 4 hour zone, I'll look at the 1 hour zone. Then I'll also take into account other confluences such as the fib and, potentially if there's a psych level or if there's a strong move into the level. All these things play a factor in where I'm actually going to set my entry. I used to trade with a 1-to-1, 30 pip stop loss, 30 pip take profit. But over time, I've then refined that strategy. And now we're targeting anywhere from, I'd say 25 pips to 60-ish. So we're looking at an average of 1 to 1.5, and I'll go over entries more in depth later in this video. So if we play it out and see what happened, as you can see, we had a tap into the level, really nice rejection, and that is where it is currently. So we did about 81 pips, but in this trade we only targeted a 1-to-1, and I'll show you why later. So the very foundation of this strategy relies strongly on just levels, daily levels. So this is a fresh start from 2021, and I'm going to show you guys how to identify levels and what defines a strong level and a weak level. So I'm guessing most people know what a level is. It's basically when the chart moves in a certain way and you'll see a certain level on the chart is respected. Price comes up to this level and rejects, comes up or bounces if you want to be super basic like that. So take, for example, this area on the chart. As you can see, price created this level. It had a nice bounce, then retested the level. It bounced again and retested it for the third time and bounced again. So for a level to be classed as a daily level, I'm looking for at least 100 pips in and out of that move. And I'll show you what I mean. Let's say we look at this level up here. How many pips into the move did we see and how many pips out? We saw 460 in, as you can see with that little number there, and we saw 580 out. So for that, for me, would be a very, very strong daily level. And now if you look at the other levels, such as this, let's say that, how many pips in and out did they have? So let's quickly measure them. This was 118, so it'd only just be classed as a daily level, 200 out. This one had 160 and a lot out, and then this one had 160 again. So these two are stronger than that one. If it's less than 100 pips, I probably won't even look at it, just because if we're looking to target at least 30 pips, we're expecting price to retrace 30% of that move. If it then becomes, 200 pip move, we're only expecting, what, 15%? Which is a lot more reasonable if we're thinking in terms of statistics and probabilities. If you're looking at something like, this tiny level here, what's the chance of price giving us at least a 30, 40, 50 pip pullback from this level compared to this massive level or this massive level? So that's why I like to look at least 100 pips. And then on top of that, I mainly focus on levels that haven't been broken, or as we call them, unmitigated levels. So for example, this really strong level here, as you can see, really nice move in, really nice move out. I wouldn't really look at that because it's been broken, and it's been disrespected. It's been breached. I'm mainly looking for the levels that haven't been broken. So like this one's been broken, as you can see, but it has created a new level here. And then this one down here. These are the main levels I'll be looking at. So really, all we're looking at when we're trying to find levels is just highs and lows. When we're in a downtrend and we're looking for sells, so when price comes up, we're waiting for a level to be tapped and then, hit a sell and come down. We're looking for the highs that have been made. So like this one and this one. We're not really looking for lows because the lows have been broken. Yes, you can trade a break and retest, but we're talking about the strongest levels, and the strongest levels are the ones that haven't been broken. And if we're talking about if we're in an uptrend, as you can see, we're looking for the lows. So price reverses from here. We're looking for buys. These lows haven't been broken, where the highs obviously have been broken. Yes, again, we can give a break and retest, but we want to stay with the strongest levels we can. And these are the lows that have been made when we're looking for buys in an uptrend. So that is how to identify levels and how to identify a strong level compared to a weak level. Now we're going to cover the fib, or better known as the Fibonacci retracement, which is this special tool right here. And you'll see all these different dotted lines. Now, when you initially put the Fibonacci on your chart, it will most likely look something like a rainbow or, weird, colors like this. What you need to do is just double tap it, click background, turn it off. You want to use these levels right here. I put the same color as for every level, apart from the 61. I'll change the color for that because that is known as the golden ratio, golden pocket. It's meant to be a very, very strong level in markets, in maths, everything. And you can also turn the trend line off. You don't really need that. So what do we actually use the Fibonacci for? And as well as the ATR, this little squiggly line here is the ATR. What do we use them for? So I use them to confirm our daily levels. I won't just take a trade purely off of a daily level. I'll be looking for the ATR or the Fibonacci to line up with that level. And if the fib or the ATR lines up, I'll take a trade. So now how do you actually draw the fib? So the fib works best when we're in a strong uptrend. If the market is consolidating like this, it's pretty difficult to use a fib. We want a nice strong uptrend. And you're going to draw the fib with the move up. So you're going to start off at the low and draw it all the way to the current high. And then vice versa for a downtrend. If price is moving down, you draw it with the move. You don't draw it back to front. You draw it with the move. So you start from the high and draw it to current price like that. And what we're looking for is for price to retrace and see a continuation. It'll retrace one of these levels and then continue up. If we're in a downtrend, we're looking for price to retrace up to one of these levels, and then we'll see a continuation down just like this and tap into these levels. And I already know what you're going to ask next. Which level do we actually take a trade from? Do we take from this one, this one, this one, this one? And that's when we use levels. For example, if we see a nice move up, it creates a level for us and we see a push up. We can then mark the level out just like that. And then we draw the fib of the move up. And as you can see, the 61 fib lines up with our level. And for me, that's a valid trade. As long as a fib lines up with a strong daily level, that is at least 100 pips. As you can see, this one's 150. And then it had a, let's see, 300 pip move out. That is a valid daily level and it lines up with a fib. So for me, that's a trade. I'd wait for price to push down. I'm not bothered about these levels because there's no level there. I'll enter a buy limit from this 61 fib and a level, and then I'm waiting for a move up just like that. Now, this is where fibs are very subjective because, daily levels are pretty easy to identify, but when it comes to the fibs, you can draw multiple. So for example, we could draw a fib of this massive move down just like that. Or we could go more short term and draw this most recent move down. Or we can go even further in and draw the fib of this most recent move up, which of course would be very, very small and I wouldn't be willing to do that, but it is valid. So again, for the trade we took last week, we drew the fib of this move down from the high to the low, as you can see, and the 61 lined up with a level. It tapped into it and worked. Now, when should you update your fib and when should you cancel your fib? So let's say this move up has happened and we draw a fib just like that. If price then continues and pushes a little bit higher, all you have to do is then update the fib to the new high, right? And it pushes, it messes around, then pushes a little bit higher. You update the fib once again, just like that. However, once the fib breaks the 61, so let's say it comes down, it does its thing and breaks the 61, that fib to me is no longer valid. So as we can see, it's broken the 61 and now there is no more buy levels left. You don't enter a trade based off of the 0 or the 1 level. The only levels we're interested in are these ones right here. So this fib will become invalid to me and instead I'll draw the new fib of this move down just like that. And then we'll be looking for sells when price retraces and comes up. So going back to our example before, how would you draw the fib on this? If we're looking for sells, you draw it from the high to the low down here. And as you can see, the 61 lines up with a strong daily level. Yes, it is quite wide, so we'd have to be a little bit careful, but that does line up. And then let's see what happens. As you can see, super nice rejection with about 160 pips. Of course, it's not going to work every time. This does not have a 100% win rate. My win rate for 1-to-1 trades is about 75, maybe 80%. And when we're targeting Take profit 1, which is normally 30, 40, 50 pips, is about 65, 70%. So now that we've covered levels, we've covered fib, the next main thing we use is the ATR. And to get it, you'll have to go into the description and click the link because it is a private indicator. You don't add it to your favorites, add it to your chart, and then it'll be there. And it is basically this little squiggly line. So you see this one, and then this one, this is your ATR. And what the ATR technically does is it measures the volatility of a pair. So what you do is measure the distance between these two bands from the top one to the bottom, and that would get you your volatility. So this is Aussie dollar NZD. This is 97 pips. And if you went to like GJ and it was 300, then that means it's 3 times as volatile. We don't actually use it for that, but that is what the ATR actually measures. So when you go into the settings of the ATR, there's a little look back thing here. And if you increase this, as you can see, it adds the previous data. And if we go down to the 1 hour, for example, you'll see what it actually does. So this updates every single day at I think 10, 11 o'clock UK time. And people use the ATR for many things. You can use it for your stop loss, your take profit, trailing stop losses. So you'll see quite often when people enter trades, what they'll do is they'll place their stop loss just above the ATR, or they can target the ATR as a take profit. However, what I use it for is I use it for an additional confluence when we're looking for strong levels. So for example, we have again our levels here, 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 and here. And we use it the exact same way we'd use a fib. If the ATR lines up within our level, then that is a valid trade, a level plus ATR. So as you can see right now, we technically have a nice buy because here's our buy level, and see how the ATR lines up. However, if we go to the next day, there's a chance it won't. As you can see, it's updated and moved up, so it no longer lines up with this level. So that is an invalid buy. However, the top band also updates, so you've got to keep an eye out on both. And if we update it once more, you'll see how the ATR actually lines up with this strong daily level here. So now, not only do we have the ATR, we also have the 61 fib. So we have the 61 fib, the ATR, and the strong daily level. So this was a textbook, beautiful trade. And there we go. There was the rejection. So now the last thing we need to go over is entries and take profits. Then in the future videos, I'll cover each one of these topics and a few extras that we also use in the strategy, but I'll go even more in depth. So this is the zone we were interested in when taking a sell. As you can see, the daily zone is pretty wide because of that wick. What I'd then do is I'd hop down to the 4 hour and see where our actual zone is. So as you can see, it's more that zone, but we do have to take into account that wick as well. And then I'll also go down to the 1 hour to then make sure, you know, where the wicks are and, you know, make sure that the price doesn't tap into the 1 hour level and misses the 4 hour or vice versa. So the 4 hour and the 1 hour is pretty similar. As you can see, the 1 hour is just here and the 4 hour was, you know, a few pips below. I'll then also take into account the fib. Where is the fib level? So the fib level is here and it's like 3 pips below the very high of the level. So what I'll do now is I'll place the trade on the chart, do it to 30-30 so we know what we're looking at. And now I'll have a play around and choose if I want to go high risk, low risk. Is there a strong move into the level? If there is a strong move, I'll go for more low risk entry. If it's a super volatile pair, I'll go for a low risk. But Aussie NZD is a pretty slow pair, so we can take fairly risky entry. And the number one rule for my stop losses is I'm looking for at least 15 pips leeway above the top of the level, because as you guys know, there's often stop hunts, liquidity grabs, and that's where price will push just up above a level, tap everyone's stop losses, and then make the move. So I accommodate for that by having at least 15 pips space above the top of the level. So as you can see, this wick is the very top. If we measure from here to the stop loss, that's 15 pips. So I wouldn't want to enter any lower than this. Otherwise, as you can see, we then only have 10 pips leeway. So that is the lowest I'd enter. And then what I'll do is I'll just play around. I usually like to enter around the candle closes. So here's the candle close. This would be a pretty nice entry. We'll often see price tap into the candle close of a level and then make a move. And then what I'll do most of the time, I'll round up, round down, especially if there's, you know, we've got quite a lot of space. As you can see here, we've got like 20 pips above. So I'll mainly just round it down or up. So we're at 2.3 right now. We could go 0.2 or we could go 2.5. Or if you want, you can just go wherever you want, really. Or you could go candle close. And I'm pretty sure for this one, I went with 2.5, which then gave us about, 1 second, a lot of pip space, which was actually a really, really safe entry. I could have went lower. So this was the entry. And as you can see, we got a really sniper entry at first, but then it came down and did a bit of drawdown and then made the move. However, where do we place take profits? So originally I just used to use 1-to-1, which was 30 pip stop loss, 30 pip take profit. However, now I target the next area of potential struggle based on a 1 hour time frame. So let's say this is the move and then we enter a sell from this level. Where is the next potential level price could bounce off? So when price is coming down, where could we see a potential bounce? I see two zones. You've either got the level down here, or you have the break and retest of this level. So there's a high chance that price could push down, reject off of this, and then come to our stop loss. Or it could maybe break through this one, come to this lower one, and then we'll see a bounce. So this is where I'll place my take profits. A majority of the time, I'll place it around the break and retest level because this is where we'll see the most action. So as you can see in this example here, we have the level down here, and we also have the break and retest. So for me, I targeted the break and retest of this zone, which was around here. And as you can see, it did pretty much to the level. And then we had some news that came out and it pushed the level even further. But as you can see, we saw a break and retest of the break and retest, and it pushed all the way to take profit too. So that is a quick breakdown of my strategy and what I use to trade in the Forex markets. And like I said, in the next videos, I'm going to go even more in depth and add some extra things that you guys need to know about before you start trading this strategy. But if you can just learn how to use levels, fib, and ATR, I guarantee you can make a lot of progress. This strategy just requires a lot of patience and waiting, because sometimes I'm waiting a week to take a trade, and then some weeks I'm taking 1, 2, maybe even 3 trades. So if you like this video, you like this strategy, and you want to learn more, I have a Discord, MCR Trading. I teach everything for free. I do mentorship, live streams, live analysis, everything. And make sure to like and leave a comment.